Nifty is up 130 points. The bank Nifty is in fact racing.
So the Nifty and the Sensex are currently in the green, but they're off quite a bit from the morning highs.
After a long time, we're getting what you would describe a proper correction. But it's just one day, 200 points.
200 is now 272, and on the bank Nifty, 1,000 points.
On the mid-cap screen as well, there's so much of red. 4% down on the mid-cap index.
Fresh border tensions, expectations of weak GDP numbers and new margin pledging rules see markets sell off sharply. Nifty and Sensex fall over 2% each. Banks fall the most. All sectoral indices end in the red.
New rules kick in from tomorrow with respect to how clients pledge and repledge securities for margin purposes. System now moves to a pledge marking system as compared to title transfers earlier.
Future group stocks rally in a weak market. This after Reliance Industries agrees to shell out over 24,700 crore rupees to acquire retail and related businesses.
Financials taken on the chin. Nifty bank tanks over 3%, records its biggest one-day fall in the last month.
In stocks and news, Adani Enterprises enters into an agreement with GVK Group to take over Mumbai International Airport and the Navi Mumbai Airport project. No respite for movie halls under Unlock 4.0. PVR and Inox shares tank between 6 and 10%. Well, markets sold off sharply, snapped their 6-day gaining streak, and the Sensex at one point fell 1,500 points from the day's high. Bank Nifty and mid-caps also fell, each recording their single biggest one-day move in the last 3 months. Welcome to Markets Today, the show where we'll tell you all that happened in those 6 stomach-churning hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi, Prashant.
Lata, hi. So
we weren't prepared for this.
Finally, I mean, the 300-point cut comes. And we'll talk about that, in great detail over the next 30 minutes. It's a packed show. You'll have market opinion from Sanjay Dutt of Quantum Securities. You'll hear from Ajay Srivastav of Dimensions Consulting Corporate Financial Services. Saurabh Mukherjee of Marcellus Investment Managers with his thoughts as well. On a deal opinion, that is the big Reliance future deal, you'll hear from Harshvardhan Dole of IIFL and Jal Irani of Edelweiss Securities and more. Well, before we get to all of that opinion, as always, let's spend 2 minutes looking at the day itself, because it started actually with a bang, 100 points plus on the Nifty, and it ended with more than a whimper, 300 points lower. So that's a 400-point round trip. Lata.
Oh, yes. To say that we underperformed European indices and Asian indices is an understatement. Yeah. We underperformed rather hugely. And the reasons, as we told you in the headlines, that there is fresh incursion probably by the Chinese troops, the PLA troops in the Indo-China border near the Pangyong Lake. There were also worries that the new margining system may mean that retail participation, at least initially, will be less because of learning the new system. But, all these are smaller worries when you look at the massiveness of the fall. If you just looked at the Sensex and the Nifty, it is a 260-point fall for the Nifty and about an 850-point fall for the Sensex. But if you looked at the day's high and then looked at the Sensex, then it's a 1,400-point fall. The advanced declines are 7 in the red for 1 in the green. The mid-cap index is down nearly 4%. And the Nifty Bank is down 3.5%. So this is a serious fall. Now, the consolation could be that maybe the Nifty is back to the 11,250, 11,400. That old range has not been violated, and we perhaps from tomorrow will get back to trading within that range. But until we get back to that range, until we are sure that we are not falling below 11,250, this is a bit of a seminal fall. Hi, Prashant.
Lata, absolutely. Looks serious, right? And the point is, we'll discuss this in the next headline in terms of that margin rules. If there is more unwinding to be done, there is forced unwinding. This may not be the end of it, but we'll get to that in just a bit from now.
You're right about unwinding, because it looks like all that ran up fell.
Yeah, but this, it looks like it's forced selling,
yeah.
Lata. So we'll, talk about that. But, I can sort of wrap up the day's action by saying everything down, and I'd not be very much off the mark. But just a few points. Pharma, PSU banks, real estate, metals, small cap, mid cap. This is index-wise, the largest cuts that we saw.
Right.
I mean, big waves of selling. The large Nifty losses, again, I mean, Sun Pharma, State Bank of India, Z, Cipla, Shree Cements, Bajaj Finance, Bajaj Finserv, IndusInd, Eicher, Hindalco, Kotak, NTPC. I mean, anything which had significant long positions, one-way long positions, saw unwinding. Then you come to the broader market. Shriram Transport, Piramal Enterprises, HAL, DLF saw that big 10% move last week. NMDC, Deepak Nitride. Some of these moves really violent. I mean, 10% move down Deepak Nitride, AU down 10%, IOL down 10%, City Union Bank, Aarti down 10%, GMR Infra, Adani Gas, Naveen Fluorine, Balaji Amines, and I could go on. And large volumes today on lots of stocks. I mean, usually even when the market is up or the market is down, I mean, the number of days when declines outnumber advances, it's still the advances which have the volume momentum with them. Not today. It was all firmly on the downside. Lata.
Well, actually, from 20th to 29th or 28th, I think, last Friday, the markets probably never had a down day. It was rising every day for the past 8 days. And it looked like at the sign of the Chinese news, it was just reports and it wasn't big. We will get our reporter to tell you exactly what he heard. But the point is, everybody decided to take profit. And when one person took, it was a cascading effect. Nobody wanted to take home less profit, and there was a stampede of selling. But let's hear it from our person who keeps his eye very closely on matters military and political. Parikshit Luthra is joining us with all that he picked up in terms of possible Chinese violation of the LAC. Parikshit, tell us.
Over 2 months after the Galwan Valley clash on the 15th of June, when 20 Indian soldiers were killed and there were casualties on the Chinese side as well, we're now getting reports that there has been another incident at the LAC. The Indian Army telling us that there was a Chinese attempt to change the status quo at the LAC, violate the consensus that had been reached by the foreign ministers, the military officials and diplomats by making some movement at the southern bank of Pangong Tso Lake. We believe that the Chinese troops were trying to transgress this area further. This attempt was thwarted by Indian troops. The Indian Army has also bolstered its defenses in this area. The Indian Army saying that it's committed to maintaining peace and tranquility through dialogue, but is also determined to protect the territorial integrity of the country. A brigade commander level flag meeting is on currently at the Chushul area to diffuse tensions between the two sides. But clearly this standoff is not getting solved. Pangong Tso and Gogra Post had been contentious issues in talks between the two sides. Chinese have refused to budge from these areas. So it's going to be a complicated and difficult negotiation going forward. But for the moment, the idea is, the priority is to diffuse tension on the ground.
All right, Parikshit, thanks very much for that. Well, we caught up with a whole host of market experts, Sanjay Dutt of Quantum, Ajay Srivastava of Dimensions, and Saurabh Mukherjee of Marcellus, on what went on in markets today. Listen in.
I think these, asset-rich intra plays with manageable debt, are going to be the big themes for 2021 calendar. My view is real estate and select intra plays are going to be the outperformers for the next calendar year. And similarly, I think one more thing that really play out big next year is going to be the real estate theme. Real estate has been lying low for a very long time, and because of low interest rates and a lot of other factors. And if you look back last few years, we haven't had really major supply addition also because everything is at a standstill. So I think select real estate plays, infrastructure is going to be a big story. So whether it's Adani or whether it's Godrej Properties or, a lot of others. And similarly, linked to that, mortgage-based businesses, mortgage finance companies. There is actual pain at the MSME, retail, and some corporate level. So let's see how government handles it as to how this whole restructuring of debt, etc. And obviously, the pressure would be felt by the banks. Now, I'm very worried about some of the larger private sector banks who, in my personal opinion, whatever assessment I've done, talking to customers, clients, relationship managers of these banks, will actually disclose a very low moratorium, but the real picture is something different. And most of the public sector banks have come out with a real moratorium they're all, going through.
We can keep waiting depending upon where we are in the portfolio. But my guess is that the most major investors in the market are reasonably, if not fully invested in the market. And that's where the challenge comes, that when you get a fall like this, do you have dry powder with you to either average out your positions or get into stuff that you never thought you're going to get at the prices? So the So, one is a difficult question to answer, but I guess my answer is that you need to be very clear why you're buying into the market at 11,500. Leave aside the 200 point fall today. Even after the fall, you need to be very convinced of the story you're buying today.
What SEBI is trying to do across various facets of our financial services industry is to create a more robust market infrastructure system where settlement after the market closes at 3:30, the whole post-settlement infrastructure moves quicker, is more automated. We don't hang around for, say, 12, 13, 14 hours trying to figure out how to settle stuff, which is the current state of affairs. It benefits correspondingly others who trade in a robust manner. It benefits both brokers and investors who trade either with low or no margining requirements, or if they have margining requirements, they put them up promptly. So it will basically transfer wealth from unorganized to organized investors, if I can put it like that.
Okay, so that's some expert opinion. The markets and experts are a bit iffy on whether this 11,300 holds. If the market slips another day, then it might set a cat among the pigeons. But let's see, this is one big day of fall. But another possible reason for the market selling off is the new margin pledging system, which will kick in from tomorrow. It requires a higher upfront cash payment in terms of a margin by the clients. Prashant, you tell us, which hurt more? The fact that more money has to be brought, so there will be fewer people willing to play around?
So there are two things. One is 20% flat margin, which goes into effect, and there is no problem with that. I mean, that is actually good. Brokers said standardized margins across stocks, and SEBI relented. This happened last month, and they said pay 20%, doesn't matter what stock. So actually that is very good. It's the second thing, which is the pledging of securities, which is the problem. And the problem is brokers are saying that the infrastructure for that is not ready. The way, you would pledge your stocks to a broker in order to get the funding available for you to do other market activity is you would transfer those shares off market, and the title of the shares would go to the broker. Now, we've seen the cases with Carvey, etc., where brokers have misused that title and used those shares for their own market activity, prop books, all other kinds of things. To prevent that, SEBI said, well, no title transfer. We will do something which they're calling marking of shares for pledged and then repledging, which happens to the depository. So it's only a technical change. There is no change in the value of shares or how much you can, none of that. It's just the way the shares have to be pledged, and that basically requires alteration to market infrastructure, softwares, etc. So brokers basically were saying we are not ready. Clearing members were also of the view. There was a meeting today with the SEBI, and what we of course now know as a fact, and ANMI, the Brokers Association, has released a statement that SEBI has not allowed an extension, which means this will go into effect from tomorrow. What this will do is, and I think it has already started today, that's the reason why you saw a fall like this, is that brokers are saying that, well, I have your shares, but they're no good to me now because I can only use them if they are marked
in the new system.
So, whatever positions you have, either you pony up the money or I'll be forced to square up. So the total market impact is tough to sort of estimate. The only way one can do, you basically need an idea about how much ready liquidity large players have to get and fund their existing exposures.
So that's immediately how do you, first of all, and also new money cannot be raised.
Correct.
Because the pledging system is not ready.
Correct.
So that perhaps is the reason why people had to take profit in a hurry. The third headline from the street today, Future Group stocks rallied in a weak market after Reliance Industries agreed to shell out over 24,700 crore rupees to acquire Future Group's retail and related businesses. Mangalam Malu is here with all the details. Mangalam, tell us.
Well, the big deal that was announced over the weekend that Reliance will go ahead and buy the assets of Future Group's retail business, warehousing business, logistics, as well as wholesale business as well, for an enterprise value of 24,713 crores. The big question, however, is how will that deal be structured? What are the contours of that deal? There was no clarity on that, but it is safe to assume that a lot of the debt will be discharged by cash, because that's what the Future Group press release says. Reliance will take over some borrowings and current liabilities and discharge the balance by cash. That brings us to the big question: what exactly could be the debt on the Future Group's books? Well, some back calculation makes you believe that the debt could be anywhere between 18 to 19,000 odd crores. How does one arrive at that number? Well, the company hasn't reported results for a lot of their group companies beyond December 2019. So the last balance sheet that is available, which is September 2019, add all the consolidated debt of the group companies, and the number that you arrive at is close to around that 12,800 odd crores. Over and above all of that, there is going to be a net debt of 2,315 crores into Future Enterprises residual business. That debt will actually be netted off from Reliance's investment in terms of preferential issue as well as warrant conversion of close to around that 1,600 crore odd mark. That's telling you that Reliance will invest close to 2,800 crores and in the residual future enterprise business. Add both those numbers together, that gives you a debt of close to around 5,500 odd crores. So 5,500 crores plus 12,800 crores gives you a number very close to that 18,000 crore mark. So that would give you some understanding of the debt on Future Group's books. Analysts say that there is not no haircut likely as far as the bank's exposure is concerned. So that is a positive for the banks. And in Future Enterprises, the residual business, Reliance will hold 13% after the pref issue and warrant conversion as well. So then the last question, what will be in the Future Enterprises residual business? Well, that will house the FMCG manufacturing as well as garment manufacturing, some joint ventures with regards to textile manufacturing, as well as the insurance joint ventures of the group will be in the residual Future Enterprise business. The value of investments would be close to around 4,000 odd crores. They would have net debt of 2,300 crores, like I said. And importantly, there will be a supply arrangement with Reliance for them to manufacture consumer products as well as some fashion products for them, the details of which we do not know yet.
Mangalam, thanks very much for that. We spoke with Harshvardhan Dole of IIFL and Jal Irani of Edelweiss on their take on the deal. Listen in.
If I were to break down the SOTP, retail and telecom, which are the new growth engines for Reliance, will account for more than two-thirds or more than 70% of the overall SOTP. And the old O2C business, which is right now the cash cow, will account for the balance. So in terms of valuation, after the stake sale in Jio, etc., the valuation attributable to Reliance is pegged at an EV of something like $52 to $53 billion. Retail, we are ascribing a valuation of $62 billion for the core Reliance retail. And for the acquired entity, we think that the potential option value is anywhere between, $15 to $17 billion.
Businesses are very synergistic, especially from the perspective that Future Retail and the consolidated entities of the Future group that Reliance is acquiring together are about 40-45% in the grocery and foods business, which, as you know, is a key focus for Reliance Retail going forward. Reliance Retail itself has 21% coming from that business. So as this business is a key focus, especially with the launch of JioMart, to that extent it is synergistic.
Okay, so that was the big deal, and that left Future Group stocks on a high, although the market was weak. We take a break on that note. We are going to come back, and there are lots more interesting things that happen on the street. We are back in a jiffy.
Welcome back. You're still with us here on Markets Today. We are wrapping up the day in terms of headlines, the big opinion. We got through three. Here's the fourth headline. Financials took it on the chin today with Nifty Bank slipping over 3%. This is the Bank Nifty's biggest one-day fall in the last 1 month. In fact, the 6-month window on a loan moratorium ends today. Almost 31% of the banking system's loans are under moratorium as of the second phase. I mean, remember, it's over now from moratorium to restructuring. Lata, but post-market hours, around the time market was closing, we had some news from RBI as well, which is pretty important.
Yes, I would think so. I think the moratorium is well telescoped, and therefore the banks will perhaps be cheered by what the Reserve Bank has said. It was a many-sided announcement. One, they have announced an increase in HTM. that is the amount of bonds that banks buy, a part of it they don't have to mark to market. That was 18%. Now the Reserve Bank has extended it to 22%, which means 5.7 lakh crore more of bonds can be bought by the banks without the fear that up until March 31, their prices may fall and we have to mark to market. So that's a very big push up for the bond market because people will be willing to buy. The second thing they announced is this buy-sell OMOs, buy-sell open market operations. That is the Reserve, what you call Operation Twist. The Reserve Bank buys longer-term bonds because there's no appetite for the longer term, and they sell what they have in shorter term, and the market is willing to buy that. They're going to do 2 tranches on September 10th and September 17th, so 20,000 crore. That again will cool the longer-term bonds. And the third thing they announced is term repos, which they will do in mid-September. Now, these are floating rate repos. The point is, the previous repo that the RBI did, what you call targeted long-term repo, that was done at a slightly higher price. And banks found that a bit useless because that money was expensive. And now the overnight rate is 3.35, the reverse repo. So banks had borrowed expensive and they were giving it to RBI on a daily basis. Now, if they apply in this repo, they will be able to mature those bonds and buy this, borrow money in this new repo. In a way, their cost comes down and maybe they will be able to pass it on as lower lending rates. The impact of all these three is that you will see yields fall tomorrow. And it will continue to be under pressure because the Reserve Bank has made it very clear in a fairly long and eloquent press release that it stands ready to take all steps to keep the markets orderly, is what they say, but that is actually a euphemism for saying that we will keep yields lower. So I think a fairly important bunch of steps.
Lower yields is what the doctor ordered for banks, especially. I mean, always welcome news for bank equities.
Recovery in bank shares should not be ruled out, especially public sector banks.
Yeah. Well, let's move on. The fifth and the last headline then, and this is stock-specific action. Adani Enterprises entered into an agreement with GVK Group to take over the Mumbai International Airport and the Navi Mumbai Airport project. My colleague Agam Vakil is joining in with the details on this one. Fairly significant news flow here. Agam.
That's right. Well, Adani Airports, which is a subsidiary of Adani Enterprises, will buy a majority stake in Mumbai International Airport. And, moreover, GVK Power will terminate its agreement with Abu Dhabi Investment, NIF and PSP for its airport business. Now, we must remember that Adani will not only acquire the stake but also take over GVK Airport's debt in this particular deal. Remember that GVK Airport holds around 50.5% stake in MIAL and in turn also holds 74% stake in the Navi Mumbai International Airport. Additionally, the Adani Group will also acquire another 23.5% stake in MIL from ACSA, that is the Airports Company of South Africa, as well as Bidvest, and for which they already have a CCI approval in place. And looking ahead, Adani Group will infuse a little more in terms of funding to provide liquidity to MIAL and also bring financial closure to Navi Mumbai International Airport.
Okay. Well, thank you very much for that, Agam. It's just that we hope airports start functioning and Mumbai feels the need for a new airport in Navi Mumbai. It's been a long time coming, and when it looks closer to fruition, the need for airports is dimming. Well, there's more stock-specific action. Shares of PVR and Inox slipped 6 to 10% respectively. This as the guideline for Unlock 4.0 released by the Ministry of Home Affairs does not allow the opening of cinemas and movie halls. I would think it is on expected lines, but nevertheless, the market had gone long on these stocks in anticipation that sooner or later they will be back in business. We spoke with Sanjay Dutt of Quantum Securities, and this is what he had to say on the exhibition stocks.
I don't think that space is, disrupted really, as what people are saying, that people are not going to visit cinema halls, so therefore the entire shift to the OTT, the Amazon Prime, the Netflix, and the Z5 is taking place. So I think there is still opportunity there, but the question is you want to get the timing right. When do you buy them? I think you buy them when they are down in the dumps. So PVR specific, I don't have a position, but I still believe that model has potential.
Okay, that brings the curtains on a fairly hectic day of trading where the Sensex lost 900 points and the Nifty 270. That's it on this edition of Markets Today.
Thanks for watching. More comes up on the other side.